Good morning. It's Critical Point Podcast on the US dollar versus the Brazilian real or Reais. This is Rich Possum. It is 8:01 a.m. Central Time, June 2nd. You're looking at a monthly chart of the US dollar versus the Brazilian real. Some people say I should flip that around. I noticed on a Forex site they were saying it's actually the more popular version of this currency is Brazil real versus the dollar. I hadn't been aware of that. It seems here in the U.S., all you see is what I'm showing you here. At any rate, let's take a look at some long-term possibilities here for the Brazil because the real fell 30%, crashed 30%, if you will, against the dollar. And it turns out that when you look at it on the China yuan, you see the same thing, which kind of makes sense since the yuan is usually protected, linked to or pegged to the U.S. Now, I also found similarities, however, with South Korea, Japan, and the euro. Okay, so to me, it really is a global movement to sell the Brazil real because of concerns over their economy slipping into recession. And they just went through one of their deepest recessions in decades during 2014-2016 period. And they were just nicely getting out of it. And now they're slipping, and now they're even projecting GDP to be minus 5%, which is really similar to what we're looking at for the U.S. There's concerns of 80% of debt to GDP as being dangerously high for emerging nations. I'm not so sure I fully agree with that, but there's definitely concerns there that with Brazil, the 800-pound gorilla, in the sense for South America, in the sense that Brazil does 50% of the economic output for South America. So there's concerns if Brazil goes down, South America goes down, and that's just, we already have a fragile global economy. We have problems in Italy, South Africa, and Turkey. And so how much more can the global economy take? So there's understandable why the world is watching Brazil, and they are now the fourth highest in death rates for the virus and second highest. So there's concerns they're not handling it well on the virus side, and it's impacting their economy. Brazil has also sold U.S. Treasuries to help back up their currency. They have not turned to buying debt instruments in the sense like what we do here in the U.S. They're not getting into quantitative easing. It's on their list, but they're trying to just check one thing off after another, hoping that something works before they actually have to go all the way on the list of what can be done to help out. And so they're taking a slower attitude towards it, and it may work for them and it may not. At any rate, what do we have here for the Real? And it looks like to me this is the first opportunity as of last month for a 3-year cycle, business cycle top. Okay, and there's the pattern from high to low to top. All right, actually it hasn't put in the low yet, but it's going from top to top. Now the thing is, it's only the first opportunity, but at least it's a negative reversal month. And now the market's just hesitating there, wondering what to do next. Monthly indicator rolled over from overbought. Well, it is still overbought, but it's flipping to the sell side. And I think you just have to take a chance and call it that there's a chance for a long-term top here, that maybe this shock is over. Now, it doesn't tell us how fast they can recover and how fast, therefore, the real will recover. But I think there's a chance here that we've got a long-term top in. It's the earliest. This thing can go still higher all the way into early next year, and I'm concerned on my evaluation of the U.S. dollar that the dollar can be sideways to higher and not bearish until we can get into next year. Then I think by 2022, 2023, we should see some weakness in the dollar. But I'm still reevaluating now in the next couple of weeks, totally reviewing the model, totally going back as much history as possible. I want to make sure I start tying the dollar more to this 6-year cycle, which is actually 5 to 7 years, that's in the interest rate market. Okay, at any rate, there is that opportunity. We found a top, okay? In addition to that, 2 3-year cycles can make a long-term 6-year cycle, and this now gets into being similar with interest rates, okay? Now, the thing is, it should drop into a 3-year cycle bottom that can occur later this year. And if that's a pretty brief, that's a brief bear market. That doesn't mean a lot, okay? Now, I suppose it could come down and then just turn into range like it did here and spend several months of going nowheres. I suppose the 3-year cycle bottom doesn't have to work very well, that it breaks down, rolls over, and goes into the next 3-year cycle to make for the next 6-year cycle, okay? So it could still turn out to be bearish, so maybe we're looking at the high for the next few to several years here for the US dollar relative to the Brazil real. We don't know yet. But the point is, it is possible that something else makes it more bullish next year and puts the dollar right back up and even into 2022. Then we can get into a long-term bear market. So lots of ifs and twists here still, but I like the idea there's a possibility of a long-term top here. Okay. Now, as far as the 6-year cycle, we can see this. It can extend with one more 3-year cycle top. So it's possible this thing could come down for a 3-year cycle bottom, go right back up to even higher still, and it's not going to top out to about 2022. And that's why I'm looking at 2022 to 2023 as kind of like a magnet, okay? Or if you use a heat map, it would be the most green or red, whatever you want. And 2022 to 2023 is when the dollar ought to be weak relative to currencies around the world. So unfortunately, it may only be the first opportunity here for this 6-year cycle. Now here's how, going back for a greater amount of history, 6-year cycle top back in 2002. That makes sense going into the US dollar index. Then it did use 3-year cycles to make a 6-year cycle, stretching it right out to maximum length. And of course, that's our great recession, the financial crisis, okay? And then we go into 3-year cycles to make another 6 years, stretch it to maximum. It seems now overdue relative to the rule of alternation for a brief 6-year cycle. So I think it increases the odds more than, say, back here for a 6-year and back here. I think it increases odds this could work for a 6-year cycle top, okay? But we just don't know. It's too long term. There's too many things where we could be right, and maybe they slam the dollar down here and really pop the real. They put in a 3-year cycle bottom, and then something else changes, and they go right back and change their mind and be bullish. We just don't know. The best I can tell you is this is the first opportunity for a 3-year cycle top, and then the first opportunity for a 6-year top, meaning this could be a long, drawn-out bullish process. We just don't know. All we know is it is an opportunity here, and at least for intra-year traders, this is also a level 1 top, okay? So I think we have a chance for lower this month at least, and to say at least a level 2 bottom, but it's quite possible it's going to be lower, say into August, September, okay? So that's the best I can tell you. If it starts trading back above the high of this month at 5.4, 1508, you would have to consider there's some retracement and that maybe it can still be bullish the dollar. We just don't know. We know the risk point. We know the evidence that it did not top would to violate last month's high at 5.96267. So that's all I've got. Really don't have a lot of news here in the fundamentals, why the market would do it. I do think there's a possibility the dollar will grind higher over the next 20 years, but that could be brief moments. There could be many years at a time that it's lower and range bound. And the reason is I really think there's a chance for inflation to increase over the next 20 years, but it may not increase as much as prior super cycles. I'm not looking for a big up move in inflation, and that would normally mean the dollar is going lower. Problem is interest rates should rise as well, and that would, but again, I don't see a dramatic increase in interest rates, but it is due for a super cycle bull market in interest rates. Normally that would support a dollar, except for one thing. When it comes to interest rates, you have to realize when you talk a dollar, you're really talking what is going on in the world relation to the U.S., okay? So, what's all the rest of the interest rates doing around the world? If we're the strongest in interest rates, probably the dollar is going to be firm and shrug off the inflation in the U.S., and it won't be as weak as we might normally expect. If U.S. is not a leader in interest rates, you could have a weaker dollar as they focus more on inflation. And we just don't know. There's going to be plenty of twists and turns along the way. But I really think we're setting up for super cycle lows in inflation and interest rates this year or next. And inflation might have already bottomed back in the Great Recession. Okay, so I'm very interested in what's going on here for the super cycle and the dollar, as well as some of these major long term. And it just looks like to me there is a possibility the dollar can be stronger next year as well, but maybe not much more, and it can hold out to 2022. But in 2022, 2023, we get a bear market at least. It's also possible it can be bearish even into 2024. The question is, has the dollar topped out this year? And at least relative to the Brazil real, I have to throw my first dart and say we got a top for the dollar, at least against the real, but it could be a clue that the dollar has topped out long term. But I'm not so sure we're going to see a fast, dramatic decline in the dollar. Hope this makes some sense and been useful. Thank you.